what's in strategist targets? When you think about all the chat in the market about potentially peaking inflation, a Fed pivot, how much good news is reflected in the price right now?
Well, Katie, all valid points. And as we focus on the Fed potentially coming to the end of the rate hikes, the question is, what's next? Are we going to get a recession, or are we going to be able to avoid it? And ultimately, what does it mean for stocks and for bonds? And it might be positive news for bonds. Finally, we're getting some relief there and some much needed safe haven, especially with investment grade corporate bonds, but we're not quite convinced that this is the end of volatility for stocks. As a matter of fact, we caution investors and we, encourage them to kind of just take the much needed reality check when we look at all the risks that our economy is facing. We still have high inflation. We have, the geopolitical risks and the weakened economy and earnings that seem to be, on the declining path. So all of these are the issues that we will have to work out before we can confidently get into the bull market territory.
Katerina, how convinced should we be that inflation, the peak of inflation, is behind us?
Well, guys, it's really hard to say. Certainly Fed has been addressing the inflation quite aggressively, and they're doing everything they can to, address this issue. But that's why it is so important for investors to stay with the defensive narratives, to be focused on the cash flow in their investment choices, to look at individual equities with the cash flow that is above the average yield, and stay with sectors such as healthcare, financials, utilities, REITs, cash flow generating sectors that provide the defensiveness and will allow us to get through the potential market volatility. Because if we do get a recession as a result of this overly, aggressive Fed policy that is so necessary in order to deal with inflation, we can expect further market declines that could be quite significant. And in order to get through that, we need to make sure that the quality of our equity portfolio is above it, and that we have all of our checks and balances in place.
Well, Katerina, on the topic of cash flow, I mean, to go back to a point you just made, that maybe the volatility isn't over for equities, but you're starting to see some opportunity in investment grade corporates, for example. When you broaden out and stack up the two asset classes, what looks more attractive right now?
Well, Katie, it's both. It's important to have a risk profile that is adequate to our needs. We need to really be honest and real about the risk that we can take, and also think about, what will it take for us to get into this bull market territory. We need to have a rebound consumer confidence, earnings that will start looking like they're on path to recovery, and curbed inflation. All these things come into place, then we can say that, yes, we are on the path to recovery. This is another phase of the bull market. But until we get there, we have to be cautious. And, that's where investment grade corporates and, bonds in general provide this leverage and provide the little bit of a safe haven, for investors that are getting uncomfortable about the stock market risk. But it will not be wise, and it will not be advisable to exit the stocks, especially at this point, because recovery is there. It's on the horizon. We're not just quite there yet.
Okay. How far away is the horizon, do you think?
Well, Guy, it's the timing is always so difficult to predict. But in our view, it's not this year. We probably are going to have significant market volatility, towards the year end, and that's why it's so, important to make sure the portfolios are prepared. But there are things we can do. We can tax harvest. We can take losses, we can position the portfolio accordingly. But perhaps towards the next year, if all the data comes into place, in our best case scenario, we can see recovery coming here, sooner rather than later. But it always seems a little bit darker before the dawn. So this is the time to prepare the portfolios for, that possible dip that comes before the recovery.
So preparing the portfolio, I mean, Katerina, to get a little bit existential, would you say that your investing psychology, so to speak, has gone from, generating alpha to really preserving capital here?
Katie, both. We need to preserve capital, of course. It's always important to to make sure that we preserve the integrity of the portfolio. But at all times, we have to be strategic and we have to be opportunistic. So, are there buying opportunities in this market? Absolutely. But the approach when we are gradually investing, taking advantage of the market dips, investing in good quality names that we would conceptually want to own for many, many years through any market environment. And when you see the dips in the market and the buying opportunities and availability and opportunity for us to increase the quality of the portfolio, we absolutely encourage investors to do this. This is the great time to do this and position the portfolio for the bull market that is going to come and take advantage of the positive cash flow and positive earnings.
Katerina, what kind of a recovery is it going to be? Is it going to be a V-shaped recovery, i.e. we're going to bounce back really quickly? Because I can only assume that that would be on the back of significant Fed easing and maybe a turn in liquidity as well. If it's not, if we don't get those two ingredients, do we get the V-shaped recovery? And if we don't get it, how slow could the recovery be? Multiple years? Multiple months? How should we be thinking about it?
Well, Guy, it's all about the earnings, and it's all about the, whether Fed is going to be successful in curbing the inflation. And of course, the biggest question is, are we going to get the economic recession? If we, in fact, at the end of the rate hikes are going to be going into the recession, the real question is how long that recession is going to last. And that's going to be a true test for our economy. How strong is our economy? And it seems pretty strong. When we look at the economic data, the reality of it is it's not all that bad. There are definitely pockets of great news that so there's there is a chance that it might be pretty significant, but we have to get through the question on whether we're getting the recession or not yet.